Hello, YouTube. Do not fight the Fed. It's something that we always hear, but at 2 o'clock today, we saw something quite interesting happen. It was that stocks just went straight up. So, if we're channeling our inner Jerome, what exactly did he tell us today, and what does it mean? Well, it's pretty obvious that at 1:45 to the end of the day, we just went straight up. And why is this so interesting? Well, look at the pattern here. Remember that fail breakdown pattern we've been talking about? Yes, we even see it here on the 15-minute chart. And this is so notable to me because on a day where the S&P actually got inside its gap zone, we're going to delete a few things here and just show you exactly what happened. We'll grab a rectangle and we can just note that we're trying to enter this daily gap zone. And this is significant because if we're able to actually get inside of here and pass it, that likely means that we're going to be getting a test to our 50-day moving average. And this is going to be very significant because QQQ has already done this. We can also note that we're trying to reclaim our daily uptrend or the green line, which means we're attempting to reclaim the uptrend for the bulls and to continue to go higher. If we look over here at QQQ, here's what's interesting. So we look here to QQQ or the Qs, and what do we note? Well, we got that same gap zone. Let's go have a look at it here nice and close because I think you might be quite surprised. We have a gap right here. Initially, we fill the gap, and then we get a gap down pump up, and we are ultimately over it, and we've actually even claimed the high from the sell-off. So this is important because we now have two daily candle closes over that 50-day moving average for the NASDAQ. We also have either a cup with the potential for a handle or retest to that 50 DMA, or we just have a straight up win where the bulls are winning. So don't fight the Fed. What does that mean? Everyone says it, but what exactly does it mean? Before we go further, I'm going to ask you for a huge favor. If you could please consider smashing the thumbs up and subscribing to the channel, I would greatly appreciate that, and I'll thank you ahead of time. All right, well, this is what the Fed told us. Let's read what they said. Generally judged risks to achieving FOMC's goal have now become two-sided. Whoa, that's like new. Many participants saw continued downside risks to economic activity and upside risks to the unemployment rate. No surprise. Most participants continue to see upside risks to inflation. Cool. Well, what happened as a reaction? So there's the news and the reaction to the news. Stocks are up. Almost everything's up in the last week. And this is very critical because we're not really that green on the month. But this pattern right here, we've been talking about it on the weekly chart. We can show it here on the monthly chart. It's a failed breakdown. It's the exact same thing that happened last Friday. It's also the exact same thing that happened today. So we got a monthly chart, a weekly chart, all saying the same thing. And why does this matter? Well, October of 2021, we went up by 7%. October of 2022, we went up by 8%. And we have that same pattern here, or the failed breakdown, and we have a failed breakdown here. Could this be a 7 or 8% month? Wow, I think people will be quite surprised. Not only that, we had PPI come out this morning, and it actually came in a little bit hot. So let's have a look at that number now. Forecast was supposed to be at 0.4. They adjusted it to 0.3, but it came in hot and the market rallied. What does that mean? Well, good news is supposed to be bad. So if bad news can't take the market down, what can good news do? We've talked about this before. When bad news cannot take the chart down, good news can usually make us go dramatically higher. That's how the market works. It's really, really easy. And that's really significant. So as we're looking forward to the data we're going to be getting tomorrow, or core CPI, what does that mean? Well, I don't know. What I don't know is this. I don't know what the reaction will be. Why? I would have expected more of a negative number today, but we got that positive reaction on the FOMC. So negative PPI print, what did we do? We gapped up. We opened today at 435. We closed yesterday at 434.5. We gapped up by a point. So arguably, on what should have taken us down, we gapped up 1 point. And then because we have a hollow candle, that just means that we closed higher than we opened. We're currently at 437 and after hours, or retesting that weekly high here. Why is that significant? Well, bad news made us go up, and then good news made us go up. One more time. Bad news made us go up. Good news made us go up. I hope you're seeing what I'm trying to tell you here. And as we look forward to this data for tomorrow, I think this is going to be constructive. If they come in as expected here, I believe that's going to be constructive. We can also, okay, here we go. We got the numbers. So initial jobless claims coming in at 210. That would be a little bit higher than the previous reading. CPI coming in half of the previous reading. Headline CPI coming down by 0.1%. We're going to note core CPI is going to be in line. So I would argue that would be constructive. When we think about what the Fed has said, being two-sided, risks to the upside in unemployment, hey, let's listen to them. And this is not new. Remember, over the last 30 days, we've been hearing things like, oh my God, it's such a puzzle. Chicago Fed Austin Goolsbee says, we see a puzzle in the rate spike. When? In the last 3 weeks. My friend, you guys do not know how to properly communicate then. We can look to something like a Bostic who talked today. Bostic doesn't see more Fed hikes unless inflation's descent stalls. So he's talking about it being dual-sided. We can also look here to an interview, from Fed Dallas yesterday saying we could actually see the nominal neutral rate at 3%. I've never heard an official say that before. This looks like the first time. We can also see Kashkari. He's saying yesterday that it's perplexing to see the rise in the 10-year note. Again, I don't think these people understand that the market listens to them. And what's the saying? Do not fight the Fed. So when they say higher for longer, we got more hikes in the tank, blah, 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 we listen to them. Well, now I'm watching what they're doing. I'm listening to what they're saying. It's changed dramatically. Rise in bond yields may mean Fed can stay on hold. Atlanta Fed President Bostic, monetary policy is sufficiently restrictive. We talked about what Christine Lagarde, the ECB president, already said, sufficiently restrictive. This is echoing the same thing that we heard from Janet Yellen saying, it's not a given, higher for longer. By no means a given. Then we heard from Rich Clarida, the former vice chair, telling us that the Fed may be done. And we also hear from the Bank of Canada governor, arguably the country that's most similar to America, telling us that we're sufficiently restrictive over a month ago. Wow. And we also have GDP getting revised to 5.14%. That's a crush. So even if there's inflation, oh my goodness, is the economy taking off? So what does that mean? I think Jerome Powell's giving us the thumbs up for liftoff. Yes, it's go time, baby. It's time to go up. So the one thing which I think could impact the market, but it's not going to be tomorrow, which is going to be Thursday, we're going to look at that CPI print. I think it could be banks kicking off earnings where we're expecting a sour reaction as of right now. I think from Citigroup and Wells Fargo, we went through those yesterday. But then we really start kicking off big tech on the 18th or Wednesday of next week. And we looked at them, every single one expecting a beat. Tesla, Netflix, Apple, Amazon, every single one. Google, Meta, all looking for beats. So are we all clear? Are we going to fight the Fed when they're telling us that we've now seen dual-sided risk? For me, that pretty much means that they cannot just keep hiking and talking hawkish and hawkish. They talk hawkish, and then when the 10-year note goes up, they're like, oh my God, why did the 10-year note go up? It's like, oh my God, do you guys not know that people listen to what you have to say? And what's happening here on the 10-year note is we're starting to take the elevator down. So what does that mean? It means we actually printed a weekly lower low. So it's no surprise the S&P is printing a weekly higher high. Notable area for me is going to be if we fall back below 4.33. Why? That's our relative high going back to October of 2022. And that would mean that we actually fail to hold that area. It kind of seems that's what the Fed wants based on what they're saying. And what's interesting about this too is that if we're truly at the peak of interest rate hiking, this should look similar to 2018 where we go over and then finally when we reclaim it, we go down. What happens? Market rallies. Last time in March, it did not happen. We went up, we back test, but that's a higher area than our previous top, which means it's a higher high, higher low. But over here, if we now fall back below that and we continue to slide, that's what the stock market wants. I want to see this 10-year note fade. That would actually be quite bullish for us. One more thing I want to go through quickly is just stocks that are actually no longer below the 50 DMA. So we're going to go here to our one-day chart, and I'll go to candles. All we're looking for is the blue line to see whether or not we're above or below it. So Microsoft, 1, 2, 3, 4 days back above now. We go here to Tesla. Tesla spent a number of days over it. It's bullish. We look over here to NVIDIA. It's over. It got an upgrade today, and it's moving higher. It looks bullish to me. Moving forward here to, what do we got next? Come on, TradingView. Load the charts, please. Bitcoin got slammed, but I believe, slammed to the 50-day moving average, and it bounced. We'll see if it holds, but at least for now, it's still above. Got a rejection off the 200, trying to bounce off that 50. Okay, come on. Be great if the charts could load here. Then we got Apple. Oh, yes. Finally got one daily candle close over that 50-day moving average. You do it, Apple. You're the king. Let's do it. Over 183 is going to be a recapture of the 2022 high. SMH should be 2 days back above the 50-day moving average. Yes, sir. That is 2 above. It's time to go up. That looks constructive to me. So if leaders are leading, we want to see followers follow. QQQ above for 2. S&P is getting a lot closer. If we're able to fill that gap and go higher, as I noted at the beginning of the video, that should lead to a reclaim of the 50-day moving average. China is now up by another 1% after 2.5 yesterday, and it is trying to digest this blue line. Looks like it's trying to follow. And I think we're probably going to leave it there because a lot of other names are trying to get back there. But I want to leave you with a little bit of a tease. And I'll say that because if you haven't considered coming to join us at thealgo.com for 14 free days to trade with me, Justin from YouTube, I'm pretty much telling you that I believe the stock market is going to go higher from here. I've now purchased over 40% in my portfolio. I was at about 40% cash. Now I'm over 80% invested. And if you want to see exactly what I bought and sold, you can join us. All you have to do is go to our website, click on this link, and you can see everything that I currently own. You can also note that week to date, we've generated 29 invest ideas, which are good for 2+ months. And we've generated 225 ideas that are good for up to 2 months. What does that mean? Man, there are hundreds of good ideas, which could be good from now until when? At least Christmas, if not further, if we look at those swing versus invest algos. What does that mean? Maybe you want to take the plunge and come trade with me, Justin from YouTube, over the next 2 weeks. I think the market's going to give us a massive, massive, massive opportunity to make a lot of cash between now and end of the year. So if that interests you, again, maybe you want to consider coming to join us. If not, the weekend deep dive should now be queued up here on the left-hand side where I talked about what I thought would happen this week to see whether or not you should keep watching. Thank you so much for tuning in. I look forward to seeing you tomorrow.